But for me, lithium and nickel are your two massive bottlenecks: scale, quality, speed. We've got a structural problem in lithium. It's a structural undersupply, and we're just seeing it this year. It's just begun this year.
What is your expected average price for battery grade carbon and hydroxide for 2023?
Welcome to Rockstock Channel. It is July 19th, Tuesday, and we are very privileged to have, for the first time on our interview, Simon Moores. We've interviewed a few times over the years Andy Miller. We referenced, I think, the first time, the price is right as a benchmark being, the benchmark, and there's a lot of kind of pricing discussion in lithium in particular, but also elsewhere. We've also had Casper Rawls on talking about cobalt, a few years ago. I want to first say, Simon, thank you very much. We connected in London in May. Both you, me, and Casper had a very long chat. Very soon after, the tragedy that hit my life, and it was just very meaningful and helpful kind of conversation, and to know, have so many friends in the community and globally, and you very generously offered, both Rodney and me, to participate in your conferences, and we're taking you up on that, and went to the Washington DC one, and very much look forward to. For sure, the one in Los Angeles, your flagship kind of cathodes and anodes conference. I'm going to assume for our listeners that most of you know who Simon Moores and Benchmark, who they are. Throughout the pandemic, you were absolutely brilliant with your EV fests. A lot of free content, keeping us all educated and in the mix, and you invested into that downturn. As a Brit, to have as much influence as you have, in US politics is amazing, right? So here you were, I don't know, in 2019 and maybe even earlier than that, testifying in front of Congress and lecturing us, your famous quote from 2019 that
we are in the midst of a global battery arms race, which so far the US is a bystander.
A few months after that, you had your first kind of Washington, D.C. conference, which I attended, and now you've just had another one. That conference was 2 days. It was exceptionally well attended.
The biggest event we've ever done. The quality of attendees were incredible. And for me, the quality of the agenda was something else now. We sent out 5 invites to 5 senators, hoping we would get one, and all 5 came back wanting to speak. If we did that 2 years ago, that wouldn't have happened. But since COVID, the whole narrative in Washington, D.C. has focused on not just on supply chains, but on lithium-ion batteries. Every senator, every government department, all the way up to the United States, know what lithium-ion batteries are about and know how economically important they are to a country's future. And that's something we've been working on, as Howard, you mentioned at the start, for a long time. And all we do is just try to educate people with data and the real story of what's happening.
I saw Janet Yellen today has created a new word. She's in Seoul with LG Chem and is talking about friend shoring. This is the Treasury Department. Okay, you've had Jennifer Granholm at Energy. You've had the Department of Defense. It's unbelievably topical. At the same time, the Build Back Better Biden plan, was knocked down by one of the senators that you interact with, Senator Manchin. But they're now talking about, being aggressive with executive orders and the like. Jigar Shah presented at your conference. He's at the Loan Programs Office. He's talking about, I don't know how many billions of applications that he is processing. They've made one loan in the battery material space to Syra for a U.S. Graphite anode, processing plant. And then the Department of Defense has actually given a grant to Linus for a processing facility, I think in Texas. So you've seen 2 small, but I get a sense that there, is a lot more coming. The bipartisan infrastructure bill, I think allocated $3.6 billion in grants, for battery mineral processing. And there's a lot of, applications in, but I think the Biden administration indicated they may make some decisions on that, in October. What's your thought process on where we may see dollars allocated by the US government?
I think it's the entire upstream of the supply chain. The way the government are thinking and the way the government move is always it's never from a mining perspective, it's always from downstream, slowly to upstream to the mine. And, there is a strong understanding in every department now that you can't just build the mine without having the market there. It's just really simple. And what we've seen over the last 2 years, since COVID especially, is this global battery arms race arriving in the US and lots of capacity being built or being planned. LG, SK, of course, you've just seen Panasonic now announce a new gigafactory in Kansas. And so that downstream is pretty much covered now from a battery and EV perspective. The problem is a gigafactory without raw materials and chemicals, secure supply of these are as useful as a grain silo. That's something I said a few years ago to the government, and it's never truer than now. The upside of what we're seeing at present is we finally have a gigawatt hour number, a plan for the next 10 years for the USA going forward. In our pipeline, we've got 724 gigawatt hours. That needs to triple for the US at least if they're going to keep pace, or let's say keep pace with China, or at least build a proper EV industry. So from my perspective, at least there's a number to anchor new mines, new chemical plants onto, and that's where the government can step in to help oil the wheels. So I think the government will allocate money at a mine level, and I think it will allocate money at that chemical stage level, lithium hydroxide, nickel sulfate, cobalt sulfate, things like this. It'd be interesting to see if there's cathodes and anode money that come in. Syra mentioned, which is interesting, that's needed. Will they put money in the cathode space? We'll wait to see, but I certainly expect and anticipate mine level money and chemical plant level money coming in.
Into nickel, lithium, and cobalt, and possibly.
Yeah, I think those three are the big ones. I think the Syra anode deal was really important. I think to have that natural graphite anode processing capacity in the US. There's synthetic anode capacity being built, which is good, but you need both. And so for me, it's lithium, nickel, cobalt in the sites.
But in the case of Syra and Linus, I mean, they're Australian companies. The funding was for US operations. You were just in Sydney at an energy forum, that Jennifer Granholm spoke at. She was talking about we can't allow, critical raw materials to be weaponized, and us being vulnerable. There's very much, an interest in partnership with Australia, with Canada. Could you see the US government ever funding projects outside of America?
Yeah, 100%. I think that the US departments have gone on record, and certainly the Department of Defense recently have put legislation into, can't say it properly, legislation into the Senate. I don't think it's been passed yet, to make countries like Australia, Canada, domestic sources. I know there's been categorization in the past in various departments, but I do think the US will now view Australia, Canada especially as domestic sources, and therefore that opens up those projects to money as well. And I think that's a good thing, because actually what I can see evolving is a new trade block for battery raw materials. I think that's really important. So you've got the US, which is leading this and pushing on all fronts in terms of different departments. And then certainly when Jennifer Granholm and her team were in Australia, they were signing signing agreements to create framework for a new trade block for key battery raw materials. And so I think this is crucial one country can't do it alone, and you have to kind of bring together the best bits of both worlds to build these new supply chains. And I think now the US is evolving certainly from just a US-centric strategy to a trade block strategy. And I think that's definitely one to watch.
That's interesting, because I know there's always been developing market aid, right? So through the USAID and other loan programs, kind of like China's Belt and Road, but it was always like, these are poor countries, they don't have the money, we're going to support them. But here you're saying developed economies could get US loans from, and they're perceived to be domestic sources. If the US starts funding ex-US, projects, what does that, potentially mean for projects in the US?
Well, you need both. You're going to need so much lithium so much nickel, a good amount of cobalt, that everything's in play. And the question is, for me, the question is speed and scale. And if legislation, let's say like permitting issues, state level issues, or the BLM issues, Bureau of Land Management issues that you have in the US, if that continues to bog down US projects, then it makes sense to partner with Australian companies, Australian mines, partner with Canadian mines, and build quicker, effectively. Now, of course, the US wants domestic raw material mining and processing, but my fear is that that's slowing in terms of a legislation perspective. And you need lithium, you need what, hundreds of thousands of tons of lithium in the pipeline 2 years ago. You know, now we're well behind in what we wanted to achieve. And so I think everything's in play, hence coming back to this trade block kind of argument, or trade block sort of community that's being built in front of our eyes.
So Simon, Elon Musk recently mentioned in an interview that Tesla is unlikely to pursue lithium mining and processing. He gave some reasoning around staff and around complexity, but now we're seeing Panasonic having a plan to expand to 2 terawatt hours of battery production, and Tesla being behind that. Is this a case of now Tesla sort of passing the buck to Panasonic now to source the raw materials for them?
Feels that way. I always think that Tesla mining, to be from a cultural perspective and an Elon Musk perspective, it actually made sense that Tesla would try and learn the mining game. The problem is, when Tesla mentioned they were going to nickel refining and lithium refining on Battery Day in the Austin Gigafactory, which they still haven't done, by the way, still haven't started building those components in Austin. But when they mentioned that, it kind of made sense. But alarm bells were ringing, especially for you guys, and it would have been for me, that you're going from physical engineering and software into chemical engineering and mining, and they are two completely different worlds. And so whilst it's a very Elon Musk thing to do, to say, all right, we're going to close the loop, go all the way upstream to the mine and build our own mines. But I think with a bit of maybe a bit of digging, no pun intended, and a bit of research, is probably a lot of risk with maybe not much reward, and outsourcing to Panasonic, outsourcing to other battery makers makes complete sense. And when Panasonic said that 2 terawatt hour number, in the stories on our website, you can read it, it was a bit of a revelation, really, because this is not only is kind of Panasonic accepting that challenge when the CTO said it on stage with me at the Sydney Energy Forum. It's massive. Like it's 4x the industry, 4 times the industry today. Is that right?
Well, 4 times tier 1 for sure.
I mean, industry today is going to be 600 gigawatt hours, right? So, and this is probably the mid 2030s. We think that Panasonic are going to aim for that, and of course, Panasonic are not the only supplier to Tesla, and we also think actually Panasonic will supply other car makers with batteries from that Kansas facility. But it's massive, and Panasonic are accepting it. And Panasonic are one of the most conservative, yet highest quality and responsible battery makers in the world. So, yeah, to answer your question, I think this is not passing the buck, but like the outsourcing that supply chain challenge to Panasonic. It wouldn't surprise me if Tesla go and buy a mine or buy a deposit just to have a bit of negotiating power and a bit of.
I'm sure they'll do offtakes and so on, and if you want to secure price or whatever and feed it through, but they don't want to be doing. It seems like they're definitely taking a step back here. Yeah, completely. And to see Panasonic come into the US in a big way, I think it's massive. I think we can't underestimate how big that move is. And Panasonic also explained they want to build the supply chain. It's not just batteries, and that's a big statement as well. So whilst the government thing might slow down domestic US sources of lithium and nickel and cobalt, Panasonic will then speed it back up again. So
it's one to watch.
Yeah, I mean, and sort of leading on from that question, Simon, you know, if they're going to use, if Panasonic's going to be mostly NCA and NCM, you know, will this make the local supply of raw materials, particularly, you know, nickel now and lithium, you know, a challenge? Because, well, there's only one high-grade nickel sulfide deposit developing company in the US. You know, you have to look around. So, you know, that's going to make it quite a challenge if they're going with those chemistries.
Yep, and that first 40 gigawatt hours from Kansas is NCA, and I think anything additional on top of that, so they go to 100, they'll probably will definitely be, well, we're not sure, but we do know Panasonic want to do NCA as well. In our numbers, we put out a story, and I tweeted a chart which showed their raw material demand assuming 50-50 NCA
Yes.
by nickel NCM. And it gives you a problem, right? They're going, I mean, mining companies, companies like Panasonic will end up having to own chunks of mines. I always had this kind of, this narrative thing that I was saying back in March of when OEMs become miners, and will OEMs have to be mining companies? What I really meant with that is, will they have to actually invest their own money to own 25% of the project, get it up and running? I think that's going to have to happen. I think Panasonic will have to pursue that strategy as well, just to turbocharge domestic sources.
Howard alluded to it earlier. You mentioned 5 key reasons why lithium won't be an oversupply as a sort of rebuttal.
That was something our lithium and raw materials department put together. I saw the Goldman Sachs news. It was just something, I mean, predicting prices falling or going up is one thing, right? That we don't have any issues with that. That is what it is. Lithium prices are high, they're going to come off. I mean, that's just the way these industries work. But to do it from our perspective without, in a bit of a slapdash way, without some rock solid fundamental research, was reckless and damaging to the industry, and it did the whole industry a disservice. And that's why we stepped up and gave our opinion on the key fundamentals of why their assumptions we thought were wrong. We disagreed with them. Lepidolite in China is the big one. Again, Rodney, we were talking about this in DC, I think, and it's an obvious one that low quality, different ores from China, you're not going to be able to bring a lot of lithium chemical from these sources as quickly as possible and to use in battery grade material. It's really basic fundamentals. I think also that you have to understand, or people have to understand, that the last 5 years of lithium is a different world to the previous 5 years. That new mines that are coming on stream at a much at an increased cost to the traditional mines of the Atacama. And so the cost of bringing new mines that increased is therefore the price isn't going to crash down to previously seen levels or even slightly above. We're definitely in a brave new world for lithium, and that's why, I mean, you can read it, you type in benchmark Goldman Sachs lithium into Google, you can read our 5 assumptions there, and it's basic stuff. For your audience, for everything Rodney and Howard you talk about, it's basic stuff, but we wanted to reiterate it because what Goldman Sachs put out was reckless.
Eric Norris, the president of Lithium at Albemarle, basically said they disagree with the Goldman report on the demand side, because I think Albemarle has 1.14 or 1.2 for 2025.
1.6. 1.6 they now. They've moved from 1.1 to 1.4. Now they're 1.6.
1.6.
So, yeah.
Okay, so on the demand side, they're saying Goldman is at 1.2. So they disagree on the demand side. And then on the supply side, this China lepidolite, narrative. I think Joe Lowry mentioned, and I think he rightly said that, if China lepidolite was such a thing, like why is like Ganfeng and Tangxi, looking at operations all outside of China, right? The ones who know the industry the best. So Matt Fernley, who we've had on the podcast as well, there's all these generalists out there, and this is a highly specialized, cottage industry of analysis here. And lithium's not a commodity, it's not well traded, but for whatever reason, Morgan Stanley a few years ago, Goldman Sachs now, they feel like they need to make like some big contrarian call you know, when things have kind of risen. And it has, I mean, I looked at Albemarle, Livent, SQM, a number of the stocks have fallen precipitously, you know, since that report came out. So as much as we don't want, you know, we think it's bunk, it has had some market impact because, and this is a weird situation, just given my situation, Simon, like I haven't looked at my, you know, portfolio of stocks for like a long time, and Rodney tells me don't look. So, and that's fine, but I do recognize these, you know, lithium's not an exchange traded commodity or not in any kind of like liquidity. There's all these recession fears. So like the copper price has gone down, you know, and nickel price has gone down. But that's, you could do that. The financial speculators can kind of do that, just sell it short. You know, it's not because the actual supply, you know, inventories are low of those commodities. So, and if copper goes down, you know, then Freeport goes down enormously. A lot of the stocks have just like, you know, been hit significantly due to recession fears. But I think lithium, the lithium price is interesting. Like they talk about copper being Dr. Copper. I'm starting to talk about lithium as Dr. Lithium. For the new paradigm energy transition. We all look at kind of like what are EV sales, what are cathode sales, to kind of figure out what, you know, might happen to lithium, as if those things are leading indicators. It might be that lithium is a leading indicator of what, you know, cathode and EV demand are. But the price are going up. Rodney tweeted just yesterday, you know, they may have come down maybe 10%, you know, short amount, but the auction by Pilbara, you know, you came out with a very good graph the other day, just showing where Pilbara's price was.
The principle of the cathode and the cathode and the downstream for me going forward is, if you don't own the mines, if you don't own the physical supply, not a contract, not a piece of paper, not a loan, not an agreement, physical supply, like owning the mine, owning half of the mine, whatever, then you're not in the game. Then you're literally outsourcing.
I agree with you 100%.
Yeah,
it has to be that way. It's no other way.
It's basic now, right? This is you're building a fundamental industry from scratch, and if you don't own the mine, quite simply, you're not in the game. It doesn't mean you're not going to be able to make batteries. It means you cannot guarantee you're making batteries. You cannot guarantee you're going to make EVs. And we're about to go for the next 10 years is going to be the most competitive and cutthroat environment for the EV supply chain ever as we scale. So it really is as simple as that now. And ask the OEMs, ask the battery guys, ask the cathode guys, the billions and billions you're putting into your businesses, do you want to risk that? And whilst they get it, you know, there's no secrets now in this industry. Everyone understands what the situation is. It's just varying degrees of massive demand. The question is, at what point someone's going to make the step? You saw BYD trying to do it, dabble, let's say, in some sort of projects in Africa. I think there's a lot more to come from BYD, but you know, I do think that they are going to have to start owning the mines. I know I feel like I'm repeating myself, but Rodney, as you said, there's no other way to guarantee making an EV.
So, I mean, what I don't understand, Simon, is how you can do planning on the downstream when you are going to risk idle capacity.
Yeah.
I mean, how can you actually commit and start to construct and do it? You're already there in the battery industry, and even to an extent in the cathode side. How do you do that when you know you've got idle capacity? Because if you go and ask the incumbents, they're not going to promise you something they can't deliver.
Yeah, but what I find amazing still, you know, look at the track record the last 10 years in the mining and refining side. It's terrible, right? The track record is absolutely terrible at bringing new supply on and scaling capacity at quality. That's not criticism of the market. It's just a reality, right? A lot of these guys are our customers, but it's a terrible track record. So why, for the next 10 years, where it's about to get so much more aggressive, would you risk that? I just don't get it. But
which is the point that I make, Simon, is if you look at the current and incumbent and future supply from incumbent versus future total supply, the percentage of greenfield and non-conventional flow sheets is growing and growing and growing into the expected supply chain. Now, if incumbents can't do brownfield expansion on time, on budget, and qualify, how the hell is a greenfield going to do it? They'll get there. I'm sure a lot of the projects will get there, but the reality is you're going to have a problem. It's part of the reason why it's not ideal, and it doesn't play into the localized supply chain. But to us, the logical thing is produce spodumene, send it to spare capacity in China.
Yeah.
But because it's not ideal, but if you need the material, have you noticed, you haven't heard anywhere where Tesla, Ford, etc. are going to take their offtakes from LG, are going to take it from Liontown, and where they're going to process it.
Downstream believe the upstream. They believe them when they say something, and they might believe them 70%, not 100%, but they believe a big chunk of what they're saying. And again, I'm not saying the mining guys are lying. I'm just saying the track record's awful, and there's a lot of risk. So that's problem number one. Problem number two is 99% of this industry weren't in the industry, let's call it battery, raw materials, supply chain, were not in the industry 5, 6, 7 years ago. So they haven't experienced the failure part of it yet. They've just probably seen raw materials going up the last 2 years. And that's something that has to be bridged, and it has to change, but we'll see.
Well, Volkswagen seems to be spinning off into this power company, an IPO. And I think in an article I saw last week indicated that company would secure raw materials. So maybe, I know Robert Friedland has said that the auto industries are so fearful of their brand, right? If there's some tailings dam disaster, Volkswagen's directly invested in a mine, it's too risky. But if they make the investments through a subsidiary, which is this Power Co, right, then there's some distance between them. And maybe that gets back to the point of Tesla prospectively outsourcing this to Panasonic. But I haven't seen Panasonic's name come up in any offtake agreement. I know there's Sumitomo Metal and Mining maybe is an arm of theirs, but whereas we've seen LG be reasonably aggressive, we haven't seen SK. LG actually made an investment in Tangxi's Hong Kong IPO, right? So they're investing in the company, not in a mine, but it is a bit of a strong relationship there. I guess it's to be seen. We all agree that they're starting to write checks. I think this Ford Liontown is a meaningful development. It was $300 million. It is a loan, but it's a low interest loan.
Yeah.
Got to qualify, but it's a means to secure a supply. You saw Stellantis invest in Vulcan, 8% or so, 50 million euro check. So checks are starting. They're small, but meaningful, in the same way that this government funding is small but meaningful. I think it will have a trajectory. It will accelerate, in my opinion.
Yeah, I do think these little things that you're mentioning, they would have been really useful in 2016. It's the wall is here. We always talked about a wall of demand approaching. It's here. This is the year. The energy storage revolution has begun this year. 40% battery growth. The industry is growing 40% this year. Lithium-ion battery cells. 40%. That's an industry on top of an industry. That was the size of the battery industry in 2019. It's the industry on top of an industry. So these little things help, but they would have been good in 2016. And there's going to be so many casualties. Like from a major EV maker perspective, major businesses will have to look at themselves and go, and it might not dawn this year, it might not be next, maybe the year after, but big parts of their businesses will fail because they can't get the batteries, because they can't get the raw materials. It becomes really as fundamental as that. And yeah, I mean, I do think Panasonic is definitely one to watch. I think 2023 will be the year of Panasonic in the USA, and the year of maybe in Europe, but certainly in the USA. And I think Panasonic's approach to building an ecosystem and the supply chain is when Panasonic move, they move, I think, and they have decided to move. So I think that's crucial as well.
they've also been working on the 4680 format and so on. So they seem to have sort of caught up on that front. So Simon, you've got the title for your next article, you can call Lithium the Existential Crisis of the auto industry, because it is true. I mean, in essence, they could be a busted flush. But so one other topic I wanted to touch on, which is always an interesting one, is when I went to the benchmark event in Cape Town this year, back in person, saw Casper and Co. The one thing I noticed was the forecast still of a transition to nickel-based cathodes by 2030. So can you just talk a little about how that interplays with LFP?
Yeah, our models didn't shift to an LFP majority, but they did shift to LFP significantly increasing its market share. Definitely NCA dominant, high nickel, not 811 necessarily, but certainly the 622s and a little bit higher. We see as kind of dominant chemistries this year. I do think the LFP story is a little bit overcooked, and people got a little bit excited, and for good reason, right? I understood the principles behind it, but then it's funny, as soon as the raw material prices start going, as soon as the lithium carbonate prices start going through the roof, no one hears about LFP now, and you know, the LFP cost profile completely changed, and it's almost like the battery cell became as volatile as the raw material.
I think the cost per kilowatt hour now is no different. So it comes down to a energy density differential. So it does really swing. You're right. I mean, it is volatile.
When your battery cell becomes as volatile as your lithium price, it's kind of, you know, you have the same challenge. And so I do think LFP is a really good way of scaling lithium ion batteries quickly. Now, of course, lithium is your limiting factor there. So unless you have a lithium mine, you're not going to be scaling LFP quickly. And so I think that's the story of the last 18 or 12 months. The LFP train has slowed. Lithium price has gone through the roof. And therefore, I think NCM and NCA will be coming back over the next 2 years as a, you know, world-class quality lithium-ion battery. Of course, the problem is you've got 5 supply chains to master, not just the one with LFP. I don't really count iron and phosphate as big issues, and so that's something to consider as well.
Related to this, CATL was reported maybe making a $5 billion investment in Mexico or possibly the US. They're a Tesla supplier of LFP. Do you think the USA would allow CATL to invest in batteries in the United States?
I'm wondering in what political environment that would happen. It would, I mean, I do think lithium-ion batteries and a CATL gigafactory in the USA could well be an olive branch to cool tensions of the last, 5 years. And that probably will happen at some point, I think. So I don't know when. I don't think it will be maybe the Biden administration that do that. It's too against the narrative of the momentum of USA versus China. But yeah, to answer your question, within the next 4 years, yes, I can see a CATL gigafactory in the USA.
Okay, and do you have any idea if this is, LFP that they're looking at? All the gigafactories that you talked about, in the United States, are they all or almost all nickel based?
All NCM. Unless I've got to look at the database, but pretty much all NCM except for the Tesla gigafactory in Texas. In Nevada.
Okay, which is NCA, right? But they're still nickel based.
Panasonic,
Yeah. Last year, when the Biden administration put out their first 100-day thing, Andy Home at Reuters wrote a very good article, basically saying that, flagging a key takeaway of that report, which covered a lot of the materials, but basically said the United States government should invest in nickel refining capacity in coordination with allies. If there are opportunities for the US to target one part of the battery supply chain, this would likely be the most critical to provide short and medium term supply chain stability. So for the government to flag this and for Andy Home to recognize, what's your sense about that, because there's only one nickel mine in America. Any thoughts on that, given that all of the chemistries you just mentioned are nickel based, right? And we're reliant on Indonesia for a lot of it, and now with the Ukraine war, and Russia, I don't know what is 15 to 20% of the class 1 nickel supply. I mean, this is a very serious supply chain issue.
100% needed, right? You have to build not just the mine level, you have to build the midstream and so on. The nickel, I mean, it comes from a downstream perspective, right? If you've got 75% of battery cell capacity in China, I'm looking at the stats now, 92% of cathode capacity is in China, 92%, right? Anode, 91%. So add that in there as well. Next step upstream, Panasonic, for example, building the Kansas gigafactory, 60,000 tons of nickel chemical. You get 60,000 tons a year of nickel chemical they're going to need for that one gigafactory, 40 gigawatt hours. And so the answer is exactly in the kind of answers I gave before: nickel chemical, nickel hydroxide especially, is badly needed in the USA, just like lithium hydroxide. And I mean, cobalt is important to have cobalt resilience, I think. So that's why I do think, just like rare earths, you need mine level and refining level for cobalt and rare earths for more of a long-term resilience, less of a large-scale demand thing. But for me, lithium and nickel are your two massive bottlenecks: scale, quality, speed.
We're going to put you a bit on the spot here and ask it. I mean, I have a view. Guess everyone has a view, but what is your expected average price for battery grade carbon and hydroxide for 2023?
So I'm going to give my opinion, which I hope it tallies with our forecasting department. It might not. I mean, I'm separate from that deliberately for many reasons, including regulatory reasons. But from conversations I've been having and thinking about it, I do think that the next 3 years. So if I'm a battery or an EV maker, for the next 3 years, I've got to be, if I can keep lithium between $35 and $45 a kilo for big contracts, then
I mean,
I'm doing
sounds right.
job. I'm doing a good job.
You're very similar to us. I think that reads through to, on spodumene, you must still be north of $3,000 a ton.
You've got a structural problem in lithium. It's not a structural oversupply like Goldman Sachs said. It's a structural undersupply, and we're just seeing it this year. It's just begun this year, so it makes sense.
And if that's the accurate price, Cowen and company, David Deckelbaum, in his recent presentation, which was our last video, and his research, I think he indicated that Albemarle, Allchem, Livent, if you look at their valuations, it seems that they're pricing in an expectation of around $15,000 to $20,000 a ton. So if you're right, these things are substantially undervalued or mispricing. The mispricing where lithium prices are going to be over the next few years, and the cash flow generating potential of those big cap companies. But this also applies for near-term producers of spodumene, like Sigma or
Atlantic or whatever.
Atlantic, Sayona, Piedmont, as well as Lithium Americas from Minera XR, so that there's a number of new producers that are not yet generating revenue and cash flow, that if you're right, Simon, and these companies are going to transition to be priced on earnings multiples as opposed to NAV multiples. And so just if you look at 2024, 25, 26 guidance, they're substantial undervalued, especially for companies that are fully funded and have no funding risk.
We know what can potentially come online in the time frame that you're talking about. We can't really be that far wrong, right? Everything is on the table. If it's not under construction or already completed or what have you, it's not going to make it in that timeline to affect the market. So that's, I guess, so the only thing is a rug pull on demand, which we're not seeing at the moment. If anything, waiting times have risen. So
315 gigafactories in the pipeline, 147 active by the end of this year, with many more going to be active next year. So these are hubs, these are your orbs, your hubs of demand that suck up these raw materials. there's a load coming on next year, let alone all the stuff that's just starting this year.
Yeah.
That for me, as a simple story, that rise of the gigafactories or dawn of the battery gigafactories, I take inspiration from the Planet of the Apes movies, is just here.